Silicon Valley Bank, Silvergate Bank, Signature Bank in New York, all failed. And yet nobody really saw it coming. We can look at hindsight and say, we should have seen it coming. Look at this, or look at that, or they weren't doing this, or can you believe what their portfolio is made up of? But too many people were focused on how the numbers can only go up. The good times can never end, and being in one country, even the United States, is so safe. Why even bother? What I've learned from the collapse of Silicon Valley Bank and the others, 3 bank failures in the period of a week, is that you are dependent on, in many cases, only one bank, and you're certainly dependent on only one government. One of the things that I found shocking in all this was there were companies, in some cases really big companies, that kept all their money at just one of these banks. They didn't bother diversifying. They didn't bother spreading things around. Now, I understand if you're a company that has $500 million in the bank, you're not going to go out and put $250,000 in each. And you certainly are seeing a few innovative players in the market who are coming out and saying, hey, we can get you $1 million in protection. We can get you $3 million in protection by having different accounts and moving money around. So there's certainly been some innovation in that regard. But the fact that businesses and individuals didn't seem to be concerned that banks in the United States, which has seen more bank failures than pretty much every other country on earth combined, is concerning. And so if nothing else, go and diversify your banking within a country. Go and open up different accounts. You never know when an account could get frozen due to a mistake. You never know when the bank could go under. You simply don't know. And let's expand that to simply one government. What happens when the next bank failure comes and the government looks at the FDIC, which has barely over a penny for every dollar in insured deposits, and says, you know what, we just can't do this? Your reliance on the FDIC or some other government agency to step in and say, all right, fine, if you had more than the insurable amount, we'll step in and make you whole. You're basically reliant on the government doing the right thing. And when does that sound like a good idea? Because there's going to come a time, as we've seen in countries like Cyprus, where you may see more bank failures. I'm not saying it'll happen tomorrow. I'm not saying it'll happen next month. Maybe it happens years from now. But look back at the global financial crisis. Look at how many banks failed. And look at the sentiment, more importantly, that came when that happened. How many people in your country, at a time of high inflation, at a time when people are struggling, Carl Icahn said, the average American has a net worth of basically nothing. How many of those folks are going to want their FDIC, their government agencies, and fill in the blank for whatever country you may live in, but how many people are going to want people who had more than the amount to get their money back? Because again, you look at countries throughout Europe, when banks failed, the bigger depositors got bailed in. They simply took some of their money. Hey, you shouldn't have had that much money in the bank. And so if you keep all the money that you have in the bank, or a brokerage account, or even an investment account in one country, you are essentially, as we've seen in just the last couple of weeks, reliant on the government, quote unquote, doing the right thing to help you out. And that's a bad plan. I think that people are probably going to go back far too quickly to thinking that everything is wonderful. This was an isolated event, that no other banks will ever fail. And again, I'm not here to call for massive doom and gloom or tell you that everything is going to collapse. But nobody thought that those banks were going to collapse, at least not most people, and certainly not the huge companies or the significant individuals who kept large amounts of money in them. What I want you to learn from this is not that doom and gloom may be coming, but to be prepared so that whether it comes or not, you know that you will be covered. And for me, the best way to do that is to say, I'm not going to put all my faith in one bank. I'm not going to put all my faith in one country. I learned that the hard way. I've had different bank accounts, and certain banks have become difficult to deal with. We had one bank account once where they said, you know what, we don't really want companies that don't do business locally anymore, so we're just going to kind of stop your account. You need to come and collect your cash. You never know what banks can do to you. Banks get rid of customers all the time. Look at what Kanye West had to deal with. And you may say, hey, I'm not as extreme as Kanye West. But they've, even in the United States, closed people's bank accounts over political reasons. We don't like you, so hey, we're offloading you as a customer. And then what do? Look at basically the city manager of Hong Kong. She couldn't get a bank account anywhere because she was put under certain pressure she had to get cash and keep it under her mattress, essentially, because no bank would give her an account. Now, those are more extreme examples. But if we look at the fact that the United States is not the safest place to bank, you might say to yourself that even if you're not the city manager of a Chinese special administrative region, or even if you don't have millions of dollars in the bank, that you want to protect yourself. The U.S. has had more bank failures in just a couple of days than a country like Austria or Singapore basically ever has. Most countries have less niche banking sectors. They have larger institutions, and they just don't have these banks that are falling off. And so not only as a depositor should that concern you, but what if you're an investor? What if you own stock in U.S. banks? You've seen banks that were down 60 or 70% on a day, and then they came back 20% the next day, only to be battered again the next day. Look at what was happening in Asia, on the other hand. Some of that contagion from the U.S. did spread to Europe. Asian banks, maybe they were down 2%. When some of this stuff was happening, many of the banks in Hong Kong, many of the banks in China, many of the banks in Singapore were actually up. They've been up or down 1 or 2%, but none of this 20, 30, 60%. You have venerable financial institutions in the U.S. Charles Schwab was one that was mentioned on CNBC. Someone said, how did this get sucked into this? But because you're in one country, not only as a depositor did you have potential issues in some of these banks. People are worried about regional banks, for example, including, again, banks that maybe don't have any problems. But people get freaked out when things get bad. They, get all upset. Maybe they open up a second bank account, maybe they don't. And then they just go back to thinking everything's normal, when the reality is, not only as a depositor were you worried, but as an equity holder, companies and institutions that really weren't involved in any of this and are probably perfectly fine got banged up. And you have people with huge losses in their portfolio now because they invested in these venerable institutions and they didn't diversify. If you would have had your money in, again, let's just say an Asian bank, those are some of the strongest banks in the world, and you probably wouldn't have some of the fears. I mean, a lot of these banks in Asia don't take on more customers because they just don't have anything really conservative to lend to. Unlike a country like the US, where you just go into a bank and it's like, hey, we'll give you a free toaster, put $100 in, we'd love to have you, and then we'll open up 8 other accounts for you. It's a difference in how things operate. And so I think when people from the United States want to go overseas and open a bank account, they're like, why is it a little bit more difficult? It's like, well, because you're getting, in many cases, a more conservative institution that when things hit the fan, their stock doesn't go down 60%, and they're just more secure. Now, they don't maybe target a particular niche in many cases, like a Silicon Valley bank, but that also averts the certain herd mentality that you had in banks like Silicon Valley Bank. And so this is an opportunity for you to say, if I'm just in one country, how much I'm really tied to whatever the policymakers in that country want to do. You want to be diversified because this stuff has happened. Look a year ago, look at what happened in Canada. Look at how people's bank accounts were frozen. Look at how people's money was taken. Look at it in countries all around the world. If you go back to Cyprus, the bail-ins. Look at retirement accounts in countries like Poland that were just taken. And I look at the rhetoric from some of the politicians in the US, mostly Democrats, but not entirely, who say, we want to raise your taxes, we want to increase the tax base, we want to restrict what you can do in certain investment accounts. The bottom line is there are constantly events that are testing your wealth. People keep getting caught off guard thinking, oh, well, Canada's safe, the US is safe. And I'm not saying they're not, but I'm saying events will happen that will put your money at risk and will require you to hope someone else does something. That means you're not in control, and it means you're not free. So my prescription for this is that both as a depositor, someone holding cash, as well as an investor, someone who has investments, take some of each of those and diversify them to other countries. Even if you're not investing in other countries, move some of them overseas. Now, if you're an American or if you live in certain other countries, you're going to need to file a report to stay in compliance with your country saying, hey, I have these certain accounts, here they are. You're not any more likely to get audited, you're not going to get in trouble, but you have to say, hey, here's the accounts that I have overseas. You should do that. But the issue of, hey, I'm going to move $200,000 of my $1 million, just an example, to a bank in Singapore, which is stronger in all the bank ratings, which is more conservative by pretty much every metric, which is going to pay me the same or higher interest rates that I'm making. Interest in Singapore banks has gone up. They're very competitive now, even more competitive than many emerging markets. What is it exactly you're going to lose there? You may lose once every 3 years. You've got to call up at a weird hour and say, hey, my debit card's expiring. Can you send me a new one? You do have to go there in the case of Singapore and some other countries. There are certainly bank accounts that you can open through power of attorney, or even the bank will let you open them remotely in certain offshore centers like the Bahamas, for example. You can do that. We have people that do power of attorney in different countries, whether it's in Europe, Eastern Europe, etc. Having residence or citizenship in a country can certainly help you get a bank account. But, aside from all these details, put some money somewhere else. Maybe consider finding some stocks. If you like bank stocks, you got beaten up recently. Why not consider saying, okay, now I've got this shiny new account over in Asia. Maybe I look at some Asian stocks. Maybe I look at diversifying because they didn't get beaten up as badly, and I want to hedge against what's happening in one country. I never want a politician, through their policies, through their taxes, through their rhetoric, to be able to affect my wealth and therefore my freedom. And so you're really not sacrificing anything. Again, maybe you have to fill out a form. Maybe you've got to make a phone call. Maybe you've got to take a trip. That's a small price to pay to know that when something like this happens again, that you're not worried because you have money that's insured in one country and you have money that's insured in another country. Go where you're treated best means find the best banks. There are only 2 banks on the list of the top 50 in the world that are in the United States. The 50 strongest banks in the world, only 2 are in the US. They're at the very bottom, and they basically speak to a niche segment in the agriculture sector. So all the banking names that you see on a daily basis, they're not in the top 50. Banks in Singapore are, banks in some of the other countries that we talk about are. So why not go there and use what's happening right now all around you that's causing such panic? Not to make you panic, but to say, I'm going to prepare, not panic. Diversify your money, perhaps diversify your investments, diversify where they're put, and I think you'll sleep a lot easier at night. It's exactly what Nomad Capitalist helps people do. And we not only help them open up foreign bank accounts, but have a plan of which bank accounts make sense, which foreign currencies might you want to hold. If you have investments, where should those be based? We have expert tax advisors not only in the US and other Western countries, but in the source countries. Taxes in places like Singapore are certainly easier because you don't have a dividend tax, you don't have a capital gains tax, so it's a lot easier, even if you live in a country like the United States, to do your taxes when you make investments or have interest income from those places. We help you figure all this stuff out. We have a network of experts that I've spent well over a dozen years building in all these different countries to know what works and what doesn't. We can help you at nomadcapitalist.com, but I want you to use the chaos that's happening, again, not to be fearful, but to be prepared.